the underlying bullish narrative for gold on a medium-term basis is still very much in play, but we had that back up in US Treasuries and obviously particularly in real yields earlier in the week, which was the catalyst for gold to correct. But if you look at gold's performance kind of over the past month or so, it has really materially outperformed on a cross-asset basis. So we run a fair value model of gold against US yields, the dollar, developed market and emerging market equities. And on that basis, we thought gold was looking about $250 expensive at the highs. By no means should it trade at fair value all times. In the bull market, we'd expect it to trade at a bit of a premium for that. Nevertheless, it was very susceptible, we felt, when it got up to those highs to a correction if any of the sort of supporting cast of bullish factors took a temporary pause. And that's what we saw from the rates market at the start of the week, and that's what really knocked gold over and caused this sharp correction.
Marcus, we did have some information around a vaccine this week from a more unusual aspect, the Russia vaccine, and clearly there's been some bullish comments about its potential, but also some negative ones about the testing regime that's taken place and lack of final stage trials. A vaccine is seen as quite significant in terms of this recovery trade and whether you want to be holding gold. Do you have concerns that if there is a positive outcome around a vaccine that we see a big sell-off in gold?
I think the key thing in terms of how we think the relationship works between the development of a vaccine and the gold market is, well, what impact is it going to have on, particularly on the employment outlook? Because I think one of the key medium-term drivers for arguing that gold can stay at really high price levels is that real rates stay very low. And even as growth recovers from the trough that we've had in Q2 of this year, central banks keep policy rates incredibly pretty much at the zero lower bound, or in some cases at negative levels, and we see real rates stay negative even longer than you'd anticipate coming out of a normal recession, because we have this big backlog in terms of unemployment and particularly services unemployment. So if you think that actually a vaccine can change social interactions and be, so to speak, a panacea in that regard, in enabling a more material and faster recovery in employment, then actually you start to have a different medium-term rates outlook in terms of the ability of central banks to begin to tighten a little bit, or at least to not run quite so loose, and it would be negative for the gold price. I think it's something, though, that would be digested over a period of time rather than an immediate catalyst, because it's very hard, obviously, at this point, to actually understand exactly what the outcome of a vaccine will be for the market, given the uncertainty about for example, how long immunity will last and how quickly any vaccine can actually be rolled out to people.